And this segment, we're going to be focusing on tax, where previously reported a total of 7,900 companies have adopted the e-invoice system, involving 87 million issuance overall as of November 19, says the Finance Minister. Datuk Sri Anwar Ibrahim said that it also involved the voluntary participation of companies from the second and third phases of the e-invoice implementation. Businesses have until February 7 to rectify any e-invoicing compliance issue without facing penalties. Failure to address this within the next 5 working days may result in fines of up to 20,000 ringgit per violation. And that also serves as a timely reminder from our guest currently in the studio with us is Thenesh Kannaa, Executive Director of TRATAX Sdn Bhd. I want to say thank you very much, Thenesh, for joining me. There's one day to go. Why, and tomorrow is the 7th February. And why is this day is an important date for e-invoicing compliance? Share with us.
Thank you, Nina. Have you realized last month, January, when you go shopping, buy things, some businesses could have given you an e-invoice. Some might have just given you a normal invoice. Even when you ask them for an e-invoice, they might have said, no, this is the normal invoice. We are not obliged to give you an e-invoice yet. Now, a lot of these businesses may have turnover more than 25 million ringgit, which means they are already in the e-invoicing regime. But when they are in the e-invoicing regime, they can do two things. One, they could issue an e-invoice to you, which means they collect your data, they collect your IC number, TIN, and so on. TIN is a taxpayer identification number. Submit this to LHDN, get a validation, and give you an e-invoice. That's one option they have. The other is they give you a normal receipt or bill or whatever, and then come to the end of the month. So for all the transaction in January, by 7th of February, they then lodge the total figure with LHDN. We call it consolidated e-invoice. So consolidated e-invoice is not a two-party document. It's actually a total sales that comprises of many different customers. You add it together and you lodge with LHDN. So, so two groups of businesses, one who may not have been fully ready. They might have issued normal invoices and all that. So they have to do the compliance by tomorrow, which is 7th of February, for all the transactions in January. And the other group is businesses may have well intended to do the compliance, to do e-invoice for every single transaction for in January. But now with hindsight, they may have realized some transaction could have been missed out because of system issues, because of incomplete data or whatnot. And those compliance gap, you can issue a consolidated e-invoice by tomorrow on an aggregate basis, 7th of February on an aggregate basis, and it will be completely penalty free for all the transactions in January where there was no transactional e-invoice issued. So that's the significance of 7th February.
All right, this is a very quite big day for businesses, people especially. And for those group or people, we can say businesses that are not completely ready, or maybe we can say still lost, are there any grace periods or extension available after 7th February?
So 7th February in a way is it's already a grace period, so to speak, because this was announced in 2023 and we had 3 phases of implementation. First phase for 100 million for the larger, 1st August for 100 million and above entities turnover. Then for companies with turnover 25 million to 100 million, it is 1st January, which was last month, 1st January 2025. For companies below 25 million, it's 1st July 2025. So it's already phased in that sense. Further, there is a 6 months leniency period given. Okay. So for even businesses 25 to 100 million, for transactions from 1st of January until 31st of July, for all this transaction, they are allowed to do consolidated e-invoice on a relaxed basis. Relaxed basis as in they don't have to quote the original invoice number and so on when they do the consolidated e-invoice. But it's very important to them for them to do it on monthly basis. Okay. So you do not wait to collect all the transactions from January to July and do it in August. That would be clearly wrong. So IRB has made it very clear this leniency penalty-free applies provided you do consolidated e-invoice on monthly basis. So if you are above 25 million for all the transaction in January, you must do the consolidated e-invoice by tomorrow, 7th of February. That is a must.
Wow. Probably they might take is it enough time for me? And probably there's already, as you mentioned, this is already a grace period, as it was mentioned during the year of 2023, and it was implemented during a few phases. And what specific steps should businesses immediately take to ensure they fulfill the compliance by the deadline?
So affected businesses, I mean 25 million is a decent size, so affected businesses might have already done the go live and might have said in January, okay, we are e-invoice ready, but now is a good time to have a final check, try to tally back your P&L figures with the e-invoice figures to see if there's any gap, because if any gap, then you still have a few more hours left to correct it, so why miss that final opportunity?
And you also share or maybe elaborate further on the consolidated e-invoice, but how can businesses transition from normal e-invoice to consolidated invoice? What are their benefits in this within 24 hours? How can we catch and highlight the benefits?
Okay, so when we talk about consolidated e-invoice, actually e-invoice is not only on the sales transaction. E-invoice also applies on a number of other transactions. Good examples are, say for example, if you pay an individual, the company pays an individual. Let's say for example, AWANI pays me a fee for speaking today, for example, then what AWANI would have to do is to issue a self-bill e-invoice, so that even if tomorrow I forget to declare this income in my personal tax return, IRB knows about it and they can remind me to include in that declaration and pay tax on it.
Oh, okay.
Okay, so those kind of things are also for January. If you have not done it, you can do it by 7 February. So it's not only on the sales. For a company, they also look at the what we call as a self-bill e-invoice implication on some of the payments and expenses that were incurred or paid in January.
Is there any challenges or limitations when, probably we can say, when using consolidated e-invoice?
I think there are challenges on routine consolidated e-invoice. One of the biggest challenges, you have to trace back all the underlying document number. But during the initial 6 months period, that challenge has been relaxed. So you don't actually have to do that for the first 6 months. So for company with 25 to 100 million ringgit, for the consolidated e-invoice, they submit in February, March, April, May, June, July, 7th of July. They don't have to track and mention the underlying document number. So in that sense, that major challenge is already addressed by LHDN. But there are also other aspects. For example, if there are credit notes and so on, you must remember to separate them out and issue a e-credit note for it, rather than issuing a consolidated e-invoice on the net amount. So those nitty-gritty, of course, to a certain extent, businesses must do their due diligence.
And how can businesses ensure they are covering all the relevant transactions to meet the e-invoicing requirements, or is it only important to sales transaction? What about other kind of transaction? Okay,
that's a very important question, because the common mindset out there, especially among those who are not very well prepared, particularly below the 25 million who are trying to prepare for the July deadline, say, okay, we get a software, we look at our current invoices and how to convert all of our current invoices into e-invoices. Well, that's a good starting point, but that cannot be your entire e-invoicing implementation strategy. Okay. You need to have a transactional impact assessment done looking at what are the transactions for which currently you're not issuing any kind of invoice, but you may be required to issue an e-invoice based on your implementation date. That's a very important question the companies must ask, and the answer to that lies in a transaction impact assessment. Now, sometimes counterintuitively, there can also be situations where currently you're issuing an invoice, but moving forward you can't issue an invoice anymore because of specific e-invoice regulation. Okay. And sometimes some of the intercompany charges, the debit notes, you may have to convert it into e-invoice. So you have to look at it holistically. Converting your billing system into e-invoicing compliance is a good starting point, but that cannot be your sole goal of that implementation project.
And I want to check, for this, is it the same as 7th of March? Businesses are required to take different actions, meet certain standards for the March 7 deadline compared to tomorrow?
Okay, so the difference between, the difference is that for businesses above 100 million, their 6 months period expire on 31st January. So they can still enjoy the relaxations for 7 February, but that wouldn't be available for 7 March anymore. So that's for the larger businesses. Okay. When it comes to 25 million to 100 million category, these businesses, what they have to do on 7th of March is quite similar to 7th of February, except they have one more extra thing to do.
Okay.
So what's that one more extra thing? So during the month of January, if you had importation of goods or you had payments to foreigners for services, you have to do what we call as a self-bill e-invoice to capture the expense. By right, you're supposed to do that by 28th of February,
Okay.
which is the last day of February, last day of the following month, with the respective vendors' details. But during the 6 months leniency period, we allow you to do a consolidated self-bill e-invoice by 7th of March for all the importations in January. So likewise, for transactions in February, for your sales transaction, payments to individual and all in February, you have to do a self-bill e-invoice or consolidated self-bill e-invoice or consolidated normal e-invoice by 7th of March. But for importations in February, you will do it by 7th of April.
Okay.
So there's a further month there.
But for 7th February, what is the consequences for not complying?
Well, as with anything with e-invoicing, the penalty ranges from 200 to 20,000 ringgit. But let's try not to go there.
Okay, all right. Probably my last question, what should businesses below 25 million ringgit annual sales do in preparation for compliance by 1st July this year?
Okay, so first, there are a lot of resources in LHDN website. You can get familiar with it. You have to look at the compliance strategy. Are you going to upgrade your software and so on? Put together a project team. Finance may not be able to handle it alone. Neither can operation handle it alone. You might need a multidisciplinary project team, depending on the size. Actually, more depending on the complexity rather than the size of the organization. Sometimes the organization can be small but complex with a lot of importation using free zones, bonded warehouse, and all that. Then you need a real multidisciplinary team to properly study the transactions and determine the e-invoice impact. So don't leave it all to finance. It might take a whole of the entity approach, and put together a project team in advance, and do not assume e-invoice is only about your sale transaction. That would be a very costly mistake. E-invoice affects different level of transactions within a company, even a payment of incentive, payment to individual, importation. It affects many aspects, not just the sales invoicing.
And for that, we hope this is just a reminder for every businesses out there. Make sure to fulfill the compliance by 7th February, which is tomorrow. Again, I want to say thank you very much to our guest, Thenesh Kannaa, the Executive Director at TRATAX Sdn Bhd. Hope to see you again in the future.
Thank you.